Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods, and today we're talking about sector diversification of your portfolio. As you guys know, I am not a professional investor. I don't work in the financial industry, and this is an opinion channel about money. Today I am driving around on a few errands for work, and I am thinking about sector diversification or portfolio diversification and how important it is to protecting our account from big moves in the market. If you guys are longtime subscribers, you probably have already seen my video on 14 rules of investing. If you're not familiar with them, if you're new to the channel, it's one of the most important videos on my channel. I'm gonna put the link right up here so you guys can check that out if you haven't. Maybe it's time for a refresher, because those 14 rules are the basis for all of my investments. Now, the reason that I bring that up is because this is a topic, diversification, that I've always considered making one of my rules, but I also feel like it's such a basic thing that it doesn't actually have to be required, because everybody should do it. I mean, the old adage of don't put all your eggs in one basket is exactly that. So what we need to do when we're looking at portfolio development, whether we're dealing with a professional investor, a broker, which I highly recommend, or if we're doing it on our own, we need to consider the sectors that we're investing in and then picking companies within different sectors so that we're not overexposed to one or another. Last week I did a video on oil and gas and how natural gas is going up, and we're seeing some stock movement there, some stock price movement, and there's quite a bit of volatility, and that's the kind of thing we're trying to protect ourselves against. So if we take our portfolio and we divide it into chunks, we can actually alleviate some of that pressure when one sector is getting hit harder than others. It doesn't matter how long you've been investing, you will soon realize that there are some times when certain sectors get affected negatively or positively, and this will affect our portfolio. The goal for me has always been to make consistent income. I want to make just a nice steady flow of income so I can predict what I'm going to make and I'm not exposing myself to too much risk. So to do this, I basically have five different sectors that I like to invest across, and I kind of divide my portfolios between those. So I put 20% of my money into the financial sector. Then I put 20% of my investment money into the franchise sector. Now, I really like restaurant franchises in Canada, so I have most of my franchise sector is actually restaurants. The next one that I like is real estate. So 20% of my overall portfolio is in real estate. Then 20% in energy. So this could be renewable energy. We're looking at RNW, which is TransAlta Renewables. I haven't actually purchased a position in RNW yet, but it's definitely on my watch list. Then also that falls into the oil and gas, which we know have been huge dividend payers. Like right now, the yield on some of my oil and gas positions is 15%. Now this is incredibly high. At 15%, a lot of those companies are actually yielding a greater return than is sustainable. And that is why I got out of that KWH last week. We moved the position and strengthened our portfolio by reducing the exposure to that particular stock. You notice this is only 80% of my portfolio. So we've got 20% financials, 20% in franchises, most of which are restaurants at this point in time, 20% in real estate, 20% in energy, and then 20% of my portfolio is in growth stocks. 10 to 12% of my overall portfolio is in growth stocks like Apple and Amazon and Google. And then the remaining 8% is where I can play with things that I'm just like, oh, whatever. What do I think's going up right now? I've got like Wayfair, and maybe I put in a position on SPY, the S&P 500 ETF, or you can do plays like weed or cryptocurrency and things like that. Like weed and cryptocurrency are super high risk gambling style investments, so it's really difficult to put a good portion of your money towards that and expect to make a decent return. So that's a very, very, very small percentage of my overall portfolio. So those are the 5 sectors that I like to diversify across, and this follows another one of my personal rules, which is invest primarily in dividend paying stocks. I'm going to show you the chart here on the side, and I'm also going to put up the dividend yields of each of these, and you can see why I like to invest in these 4 different sectors, and then just a small percentage of my portfolio in growth stocks. And that's it. There's no secrets here. This is just a simple way of making regular income every single month off of investments. Thanks so much for watching. Let's get rich together.